Oh my goodness. Okay. Inventory is the name of the game. And when you're playing that game, you got to be ready. So
Yeah. And
that's
that's
what
exactly what we want to talk about today, because as we said in last week's show, we anticipate rates are going to be dropping, guys, and the spring market is going to be very, very busy. So that's why we need you to talk to Carol Anne and get your pre-approval set. So there are three things we want to talk today about quickly. We're going to quickly talk about rates, but then we're going to go into some of the things that Carol Anne offers through Key Mortgage that you need to take advantage of, so that when you're in a multiple offer this spring, you're going to be able to win the day. And even if you don't go cash, there are ways to win. Even if, we'll talk about it. All right.
Can I just interject one quick thing? Can I just interject one quick thing? If rates go down, everybody who's watching and got like scared to death from the stats we just had, more sellers are anticipated to enter the market. So there will be a spring market. So what we're not trying to do is say, get ready to fish for the two guppies in the pond. That too. But we're also saying that the pond should be more stocked than they were last year. And so get ready to catch I'm going to get away from fishing. I don't even know how to fish. But
yeah. Do you fish, Kyle?
No. But I admire people who do. So anyway, but the point being, we are trying to get you ready for when properties come on the market. There are going to be a lot of buyers out there, and you want to get the ones that are the properties that are available. Carol Anne.
Right. Right. So nobody's trying to, in start panic mode. But the reality is that I see it first, because based on how many buyers I'm getting and pre-approvals that I'm doing, I can get a little bit of a sense of what's coming for the spring market.
Right. It's a very good point, because we talk about showing traffic. That's even more of a lagging indicator than who's coming to you, right? And getting
exactly
done.
Exactly. So I will tell you that even through Christmas to New Year's and since January 1, I have really not slowed down. I've had a steady new clients. So new people getting pre-approved, new buyers coming into the market. So having said that, let's talk about how you can best be ready for this market. The first thing is obviously talking to your lender as soon as possible. You want to have the conversations so that everybody, you, yourself, and your agent know what's the budget, what properties should we be showing and looking at, not going out and falling in love with a property that's more than what you want to spend or more than what you want to qualify. So having the consultation is the first thing that you need to do.
Okay, stop right there.
Yep.
If my client's buying a property and thinks they're moving in July, is it too soon to talk to you?
No.
Hear that, everybody?
It's not.
It's not too soon. So important.
It's never too early to have this beginning conversation. And I want to stress that when you have a conversation, and I like to call it a consultation, when you have a mortgage consultation, that's all that it is. It does not mean that you're filling out an application. It does not mean that your credit's going to be pulled. It is literally an information gathering, educational conversation that you need. If you are talking to a realtor and you are thinking about moving, then you should already be engaged with me. You should already be having these conversations with me. So it's never too early.
And it's also educational for the buyer to know, because often buyers avoid you because they're scared to find out their credit score, one.
Yeah.
Two, they're scared to find out the things that they need to do to improve their credit score. And three, there is comfort in thinking, oh, I can buy something without understanding the steps to doing it. So,
right. Yes. Yes. And a lot of, you're right. And looking at those rental figures, it's almost like, wow, why are people renting? And a lot of people are renting, Kyle, for those reasons, because they don't know, they're scared. They think they have to have 20%, all these misconceptions. So having these conversations, I often turn renters into buyers because they just didn't know. So again, the consultation early is really important. Let's
All
talk
right, so
about.
let's
Okay.
go ahead.
I was gonna segue into the interest rate conversation, not just
Okay,
what
good.
the interest rate is. Are we ready for that, or you want to
Yes,
stay on
definitely.
this? Okay. So interest rate, obviously, interest rate is important, and unless you're living under a rock, you are hearing about interest rates all the time. What I want to say about interest rates is that they are not the actual rate, and comparing what the rate is between lenders or what you see on the billboard driving down the highway really does not become important to you until you are under contract, until your offer's been accepted, because that's the first opportunity that you have to actually lock in your interest rate. So to be worried and focused on what the interest rate is when you haven't even really started going and looking at properties just doesn't make sense. So I like to tell my clients in the initial conversation, yes, I understand that interest rate is important, and I will explain to you how the interest rate impacts your monthly payment. However, don't focus on that right now. Right now, we need to have all these other conversations. And when you go under contract, that's when it's time to compare rates.
But you also help people understand what price range they should be in based on a monthly payment. You help them understand that, because that's one of the key things that we as agents really like, is that we don't have pie in the sky people who think that they can afford things that they can't afford, or who underestimate what they can afford.
Right. And as you know, in the market that you're in, and you sell a lot of condos, it doesn't make sense to just focus on the purchase price. What buyers need to understand is that it's about the purchase price, the real estate taxes, and the assessments. You cannot just look at what is the cost of the house or the condo. You have to, in order to stay within your monthly budget, you have to take the components of those other two variables, because we all know that HOAs and taxes can vary widely from neighborhood to neighborhood and property to property. So yes, working backwards and understanding your monthly, what you want to spend monthly, and how to correlate that to the purchase price is what I help people do.
Yeah.
I'd like to interject here about something that we talked about before we went on air. And that, Carol Anne, is the fact that there are a bunch of other lenders out there who are telling somebody in the pre-approval process that they've got a special program with a 5.8 rate today, for example.
Right.
And the point is that doesn't matter. Right. And I don't know about you, Kyle, but I've had it happen a lot where people will say to me, oh, I've already got my lender. They've got a great rate, but they aren't even under contract yet. And tell us about the fact that once you go under contract, even if somebody's an eighth of a point off, you might be able to match that rate, correct?
Yes. So as Baird & Warner's in-house lender, I am very confident in saying that I don't think that anybody's going to get better service than what I offer. I like to, it's hand holding, it's white glove service, whatever you want to call it. But we obviously want our clients to not only have the best service, but also the best rate, because we understand that is what is important to people's, monthly payments. So we understand that. And we are very competitive. We are often, the lowest rate. But if we are not, I have the ability to request a rate match. And in that case, let's just say that you and I have been working for several months. I've done your pre-approval. I've helped you understand your budget. I've educated you and all of this. And you go under contract, and your bank sends you something, and you decide to see what the rate is there. And if that rate is, like Anne said, an eighth lower or half a point lower, then I will request to match it. And maybe 98% of the time, we're able to match it. And that's really, when in the beginning stage, when you're talking to a lender, that's why it's not about the rate. It's about who do you feel comfortable is going to answer their phone on the weekend, work Sunday nights like I was doing last night, get you the pre-approval and run numbers for you. That's the other thing. It's like, if you have a pre-approval letter and you just go and you write an offer, but you haven't talked to your lender Sunday night to ask them to run the numbers on that particular property, like I don't understand how people do that. I run numbers for my clients before they write an offer every single time. Because what if I've talked to that client several months ago and they've just been looking, and we haven't been in touch because they haven't found anything? Well, now the rate might be different. So they should be calling me and asking me, plus maybe the taxes that are listed in the MLS are not correct. So before my clients write an offer, I will go to the assessor's office. I will pull that tax bill, make sure that there's no exemptions on there that they won't be getting, so that they have an accurate understanding of what is the monthly payment on this house that you're about to make an offer on.
Well, you and Anne and I will make sure that when we send in an offer, we have a property specific approval
Yes.
at the price of
Yes.
the offer.
Yes.
So that, one, it's the most strategic document we can provide, but two, it is also for the buyer knowing that they've got this organized, that this
Right.
is something they can do.
Yeah.
So it is, we love that you do that.
Yeah.
It's a great practice for all you agents who are watching out here. Make sure you do that too with your lender and with your offers.
Yeah. Okay, so let's talk. I want the highlight of what I want to talk about today is our secure shop pre-approval program.
Yeah.
So I think that this is going to be very important for this upcoming spring market. And I think that this is probably the best program that we have right now. So normally when you have a pre-approval letter, you don't go to an actual underwriter. Your file and your application doesn't go to an underwriter until you are under contract. So, and the underwriter is the one who's obviously approving the loan. So just because you have a pre-approval letter does not mean that your loan is going to close guaranteed. It still has to go to an underwriter who has to approve it. So we have a new program called the Secure Shop Pre-Approval, where we are taking you and your file and sending it to underwriting prior to being under contract. So we are having you approved as a buyer without a property by an underwriter. That's huge. So what that is telling the seller is that this is basically a cash offer, because nothing is going to go wrong with the mortgage process. All we need is the property, the appraisal, and the contract. So imagine that you are in a multiple offer situation and you have a secure shop pre-approval, and the other 4 people have just a standard pre-approval letter. It's very to the seller, your offer is going to be the strongest. Obviously price is still involved, but it's going to give the seller a lot of confidence that nothing is going to go wrong. And I'm having most of my buyers are all going through the secure shop pre-approval process now. It takes about 4 to 5 days because obviously an underwriter is actually reviewing all of your documents. So it's not as quick as, I can do a pre-approval letter in 2 hours if I need to. I don't like to, but I can. So it does take a little bit longer, but it really sets you up to be successful in this market. And I've had several clients win in multiple offer situations because they had this pre-approval.
So, and the cost to the buyer is
nothing. There is the only difference. So let's get into because everybody says, well, why wouldn't everybody do this? Well, if you're not going to buy for 6 or 7 months, it might not make sense because, you would have to have another credit pull. So in this, for the secure shop pre-approval, we do a hard inquiry, a hard pull on your credit. Now, some people don't even know that there's a difference between a hard pull and a soft pull. There is such thing as a soft pull. So when I have buyers who come to me, but they're not going to buy for 6 or 7 months, I do key mortgage offers, what's called a soft pull, which does not impact your credit score, but it does not impact your credit profile, but it gives me all the information that I need. So it's a very helpful tool for me. Not every lender offers this. Big banks do not do this. If you go to Chase and you fill out a mortgage application, they will pull your credit. We offer it, and I utilize this when I need to. For a secure shot pre-approval, because we are actually underwriting the loan, we do need to do a hard inquiry. So if
you're going to be buying anyway, you would be having that pull.
Exactly. Your credit reports last for 120 days. So that's how long they last. So that's literally the only difference. And so I'm just encouraging, all my agent partners and all my clients, to set you up for success for the spring market. The secure shot pre-approval is a no-brainer.
Let me ask you a quick question. So we've been in a competitive market, we don't have 4 or 5 days. So a buyer doesn't have to have a specific property in mind for a secure shot?
No, as a matter of fact, they most often don't. I'm doing this right now from the very beginning. I'm skipping the regular pre-approval process for most of my clients and going straight to secure shot, no property. And what we do is we pre-approve them for like the max, give me the max that they'll qualify for. It doesn't mean they're going to have to spend it, but because we don't know how much they're going to end up, right? But at least we know what their top is. And so we just set the file up for the underwriter to pre-approve them for, what their max is going to spend.
So what does the document look like? Because I don't want my buyers to submit a letter that says she's approved up to $600,000, because that's not strategic from my negotiating standpoint. I want it to be for the offer.
Right. So in that situation, I would, because obviously we work together. So I could always create that property specific pre-approval, right? And you could use
based on sure shot.
Well, I mean, I could add that that person has been fully underwritten. Of course, I always call the listing agent, because even if you look at the secure shot pre-approval and it says it, oftentimes agents aren't reading every line on the pre-approval. So it takes a phone call from me to explain to the listing agent what it even is. I mean, the first couple of times that I called the listing agent, they're like, "What?" I said, "Yes, they're approved. They've already been to underwriting. We can close it." Here's the other thing: we can close in 2 weeks.
Yeah.
Now, I'm going to preface that on condos, it's difficult. Condos, we are beholden to.
You have to get the condo approval and the PAL and all that. Yeah.
The condo board, the condos.
The HOA, yeah, getting them to fill out the required documents can sometimes be a nightmare. But we essentially, on a single family, we have to order the appraisal, get the appraisal. And so we can do a much quicker close with a secure shot pre-approval as well. So it's just a fabulous tool. I love it. My clients love it. My agent partners love it. And yeah.
Oh, it sounds.
One last question, Carol Anne. Is this on conventional rates only?
Conventional loans only. We do not do it for jumbo loans.
So for a single family home, what number is that?
766,000 and like $26 or something. Yeah, 766.
The loan amount, not the purchase
loan
price.
amount. Loan amount. It's amazing.
Amazing.
I know.
And they can be for condos too, not just single family, but condos.
Yes, exactly.
Amazing. Excellent work. Well,
and that's where the market's the hottest, right in that 5 to 750 range, right?
Right.
850, yeah. So
right.
Awesome.
And looking at those rent prices, I mean, I really encourage you agents out there that are like you said, Anne, that you were taking out for rentals. It's like, have a conversation, see what it's, what the difference is in the payment between the mortgage and the rental. I think there's a lot of opportunity for renters out there to get into this market now. And, you know, the other thing too, I want to say about rates, we have gotten to the point, which we all knew that we would. Everybody's comfortable with 7. Everybody's comfortable with 6.875. Most clients that I talk to now that are just coming into the market, they're not even talking about interest rates. You know, I mean, so we've wrapped our head around it, and nobody's crying about the 3% anymore. I feel like, I mean, there are a few people that were also looking, you know, 2 years ago, and that's where it's a shock. But I feel like we've kind of settled in here, and as rates continue to drop,
sellers haven't become people with the low mortgage.
Yes. But that's where as our rates continue to fall, like you said in the beginning of the show, that's where we're going to it's going to become unplugged, because as rates continue to fall, people who are sitting with the lower will be more enticed to sell. And that's what I think is going to happen. And we have the second look. Don't forget about that too. If you have already talked to a lender, we will give you $250 in a Visa gift card or as a closing cost credit, just to have a consultation with us. Let us take a second look at what you've already received from another lender. And again, most of the time when I talk to somebody on a second look, they become my clients. They're like, oh my gosh, I didn't know all, you know, like just the education part of it. And, you know, we have a lot to offer. So
these buyers are getting paid money to learn and make a better choice.
Yes.
How's that a win-win, huh?
Exactly.